My name's Eric Owens. I'm president of Granada Gold. We're a junior Canadian gold exploration company with on a few steroids, so to speak, because we have a mining permit in place and we are trying to march down a path where we can start to see some production in the near term. Just a few of the highlights. We're located on the Cadillac Break Trend in northwestern Quebec, which is one of the world's most prolific structural gold structures. On the diagram, the map at the bottom of the slide, that 120 kilometers from the left-hand side at Kirkland Lake to the right-hand side of Val-d'Or has seen about 120 million ounces of gold produced from some fairly sizable gold deposits. A number of the gold deposits are shown on the map as gold boxes. The red triangles represent gold mills. Those mills are important to Granada because we don't have a mill as of this point in time, but our idea is to try and use some of those mills one or more of those mills for toll milling purposes. So our property located in the Blue Star just south of Noranda. So as I noted, we have development potential. We have a mining permit in place. We have resources totaling 1.2 million ounces of gold, pit-constrained resources right at surface. Mostly two-thirds of that is measured and indicated, one-third inferred. We have a plan in place for a starter pit scenario to start production from that, and I'll get into that in a little later. Growth potential as well on that resource. We figure drilling potential along strike can increase those pittable resources. As you can see, obviously we're in an infrastructure-rich area, and certainly an experienced management team, which I'll touch on a little later. A little more detail with the project location. Showing the claims, the project itself, the property itself is 7 kilometers long, roughly. Shown in the red outline is the outline of the pit-constrained resources that houses the 1.2 million ounces of gold. It's centered upon that black dashed line that is the Granada shear zone. The mineralization itself dips about 50 degrees to the north. And the shear zone itself, the mineralization and alteration is about a 400-meter wide zone, which allows a pit that is fairly deep, up to 400 meters deep in this case. To the north, we have the Cadillac Break, the north dashed line, so the shear zone that the Granada gold mine is situated on is a subsidiary set related to the main Cadillac Break. I've touched on some of these things. I won't discuss too many of these things, except that the 116,000 meters that we've drilled on the property have really been aimed and focused on defining the resources. Very little exploration drilling has been done on the remainder of the property that we previously showed you. Over the years, 3 bulk samples have been taken, producing some 22,000 ounces, 23,000 ounces of gold. And those results and back calculations are consistent with the metallurgy studies that we've done over the years as well. We get something on the order of 90 to 95% of the gold by gravity separation and followed by cyanidation. So it's a fairly simple, typical gold deposit in the Abitibi belt of northern Ontario and northern Quebec, Canada. There's nothing strange about the ore. Here's an oblique aerial view of the resources, the pit-constrained resources. 1.2 million ounces, 762,000 ounces measured and indicated, 455,000 ounces inferred. Our likely next step growth phase would be to be drilling on the right-hand side of the main mass of that body of resources as we attempt to grow the deposit, the open pittable deposit. So back to the various options available to Granada Gold. On the development side, we are looking, as I mentioned, we have a mining permit in hand. That mining permit allows us to mine 550 tons per day of ore and ship that off to one of the local mills. So our goal now is to try and seek a milling agreement with one of the local mills in the region. Closest one are owned either by IAMGold or Agnico Eagle, but we will be working on some of these options as we go forward. The plan in place comes from a 2014 pre-feasibility study that we completed a number of years ago, in 2014 in fact, and we envision a 3-year production scenario which will see production of 25,000 ounces of gold per year over that 3-year period. With an initial investment of $7 million, we can recoup that in 3/4 of a year, and by realizing $10 million worth of after-tax profit for each of the 3 years running. So that's the near-term development potential. We could, depending on when we get a milling agreement in place, will determine how quickly we can start down that path. For the longer term, we want to look at the engineering and economics of the broader resource, the 1.2 million ounce resource, and or any more that we discover with exploration drilling. We'll be moving down over the next 4 to 18 months the path of PEA style studies first, and then PFS style studies. Now the PFS is going to require more drilling, infill drilling for the inferred resources, but we envision that we can go down that path over the next 12 to 18 months. In addition to the development side of things, there's the growth side of things at the deposit. Again, the red outline on the map shows the resource, the broader inferred, or current resources, I should say. The blue dash line represents the next drilling phase target area. That is shallow drilling to the west of the main mass of that current resource, such that we can try and add to the resource estimate, any future resource estimate. That is an open pitable style resource. So that's our main focus. That will be our main focus going forward. We have already a 5,000 meter program planned to do just that, and that can be started as early as late spring. Just to wrap up with a few other statements, recent share price, 12 to 15 cents, $9 million market cap, issued outstanding shares, 70 million, fully diluted 95. So we're like many other junior gold exploration companies, mining, or junior mining companies, we're a good value. I mean, a lot of people at this conference have been presenting some great projects and great properties, and there seems to be a real disconnect or disinterest out there to mining projects, but I'm sure that will change, and I'm sure we're all waiting for that. Waiting for that change. In addition, Granada shareholders benefit from certain dividends that are in place that prior management has put in place. There is a 3% royalty on the 2 mining claims that comprise the current deposit at this stage of the game. Those get paid out to shareholders as production begins. So that's an important point for people to remember when they're considering Granada as an investment. And just to wrap up, management, we're experienced. I'm an exploration geologist, resource geologist. Frank Bassa, our CEO, is a metallurgist, and together we have a group of people that can bring this project forward. Thank you.